Mr. Morawski, do you you mentioned tax credits to homeowners to help them incentivize them to? Do you think that to improve the insulation of their homes or upgrade their heating systems or air conditioning, do you think that drives the decision to its ultimate conclusion?
Most definitely. Most definitely. You'll see in your state, you have some great utility incentives for people to, we call it home performance, insulate, windows, duct system, ceiling, many different things. And you've got some huge incentives via your utilities in New York State. But New York State probably is doing the best of any of our 50 states in that. My state of Michigan, it's a mishmash and a mess.
Do any of you gentlemen, Mr. Kapp, Mr. Smith, Mr. Morawski, know, Mr. Carroll may know in a broader way, what's your effective rate? I mean, we all know what the actual rate that you pay or that's listed on your in the tax code, but anybody have an idea what your effective rate is after all the depreciation, tax credits, accelerated depreciation, et cetera?
I don't think you can hold me to this, but the last time I calculated, it was about 27, 28%.
For us, actually, the PMA, our association has created quite a comprehensive tax template for those things. I don't know if you've had a chance to review it, or if you've seen this. Our particular company, including local and state taxes, is 35% right now. So that's what affects me and our company.
But that isn't your actual rate that you pay after all the.
No, but again, that's with after our base case where we are right now is it turns out to be 35% of the total dollars that are going into that. The actual federal taxes are approximately 27.7%.
Okay, so,
right.
Morawski, you have any idea?
You know, I honestly don't know. I'd be taking a stab in the dark.
Mr. Carroll, what do you think it is for all the people you handle?
Well, I don't prepare tax returns. I'm an economist, and I tend to work on tax policy issues. So I have the virtue, or I suppose, of not working on actual tax returns. I guess I would observe there are really different ways of thinking about tax rates. One could think of an average tax rate. One could think of an effective tax rate. One could think of a marginal effective tax rate that would take into account different features of the tax code in different ways. A favorite concept that's often used by economists to think about investment decisions, allocation of investment, the amount of investment in the economy is the marginal effective tax rate that would take into account not only the top-line individual or corporate tax rate, but also take into account the value of accelerated depreciation and investor-level taxes on capital gains to indicate the variance of tax rates across different types of economic activities.
Do you think that advantages given to capital investment for equipment, for example, with Mr. Smith, or do you think that they're pitted against someone who is less capital intensive than, say, Mr. Morawski's business, which is mostly labor?
Yeah, I think there can be a fair amount of unevenness of tax rates across at different economic activities, at different industries, different sectors, companies that invest in particular assets versus others. There's a fair amount of unevenness, and that's certainly a consideration.
So it does suggest to you that Mr. Morawski might be paying a disproportionate share based on the total volume of dollars he does compared with.
Yeah, I think one has to come back to, again, the value of the specific tax preferences. If one, for example, were to think that a provision like the R&D credit provided some significant spillover effects to the broader economy, or one thought that incentives for some of the renewables, alternative fuels, solar, geothermal, and so on, was providing spillover effects to the overall economy, then one might be able to justify the unevenness. I think it was a couple of years ago the Congress had considered requiring the Joint Committee on Taxation to do a cost-benefit analysis of each of the tax expenditures in the Internal Revenue Code, with the notion of evaluating on a cost-benefit basis whether those provisions were providing sufficient value to the economy to justify their presence in the code.
But then, my time is up. Thank you, Chairman. You said that, Ms. Kapp, that you were encouraged to invest in capital equipment because of the accelerated depreciation. Do you think, I mean, do you think that it's, you wouldn't have done it otherwise? Is that I mean, is that what I can infer from that?
I think it's more a question of timing, when we would have done it. With the uncertainty of what the next year's tax code was going to be, we accelerated purchasing equipment that we probably would have pushed out and bought in a more timely manner for us.
Thank you, Chairman.